What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 1st of 2021. Well, folks, I hope y'all are having a fantastic day wherever you are. And in today's video, we're not only going to be talking about Bitcoin's price and whether or not we've seen the worst of the correction, but I want to spend some time to talk about what's going on within altcoin markets, because over the last month, we've seen the shift towards other competitive layer ones from Ethereum, which originally held the stage for decentralized finance and enterprise blockchain. But the question here is whether or not that momentum to other layer ones can maintain. We've got lots of things to consider when asking this question. We're going to be diving into all of it and more right after our quick sponsor. And our sponsor for today's episode is TaxBit. The 2020 tax season is here. Calculating taxes on cryptocurrency is complex and time-consuming, but TaxBit has made it easy by automating the entire process. Link your exchanges and wallets to seamlessly pull your transactions through their tax engine and auto-generate your tax forms. Aside from automating taxes, TaxBit provides crypto enthusiasts real-time portfolio tracking and tax optimization visibility so that you can make tax optimization crypto trades throughout the year. If you're looking to stay IRS compliant, have real-time portfolio visibility, and save money on cryptocurrency taxes, then TaxBit is the platform for you. Check out the link down below in the description for more information. Alrighty, everyone, so let's go ahead and dive straight into the market here, taking a look over the last 24 hours. Thankfully, after a couple days of sell-side price action, the vast majority of the market here is starting to turn into green territory, with very few players down here in the red, mainly stablecoins. So this is actually good to see. We're starting to see a little bit of optimism return back to the market here. But I want to go ahead and highlight first and foremost what's going on with Bitcoin here. Now, obviously, a lot of people have been panicking, thinking that this is the absolute market top. And to be honest with you guys, I don't think we're anywhere near the market top. It would take some time to kind of explain why, but simply put, we've just recently broken above the all-time highs back in December. It's very unlikely here that we're already at the market peak here. That being said, a lot of people, though many people already agree with me in this case of this narrative, that we're not near the market peak. A lot of people are curious, have we seen the worst of the correction? And I got to say that, whether or not there is a continuation lower, for example, back here we had a 30% pullback. So far from top to bottom, we've only seen about a 20-something% correction. I think that though there may still be a chance to retest those lows, I've already gotten comfortable enough with averaging in, and that's why I built a position around 46K. So again, I've been making in some averages on this dip here. Anything really below 20% is usually a relatively favorable range for me personally. But I digress. Above all, I want to go ahead and take a look at the previous correction to see what we can learn from in regards to how these corrections are generally working. So we had the breakout above the all-time highs at 20K. We had the first primary part of this miniature rally or intra-cycle rally. Then we had a secondary one where things went much more vertical. We had about half of that continuation going through, and then a correction downward of about 30%, finding support multiple times at a consistent range. And then after rumors and then eventually a confirmation, having the catalyst here that carried us forward, which was the Tesla buy side news for Bitcoin. And then after that, we had again the first phase of the cycle here, the escalation up here, the breakaway in this case in the second portion, and then a correction downward towards the midpoint, just like we did over here. So the way to view it is almost like a stepping case. So when price starts to step away from this stepping case, right, gets past the first phase of the cycle and goes to the second one, we should be expecting that there is going to be some kind of correction. Now, we don't know exactly when that is. We don't know how to time those. And as we can see here, the sell-off comes quite quickly. So I'm not recommending that you guys go ahead and try to trade these cycles. The only thing I'm saying here is that when we get towards these portions where we're down 20, 30%, this isn't a time to panic sell and try to take profits. You are on the likely losing end if you try to take profits when price has already gone down 20, 30%. That's usually about the correction range we see for these intra-cycle pullbacks in Bitcoin. And we're actually publishing a really nice in-depth report in the Dash report that will go into this a little bit during the release that we're putting out today. So you guys can always sign up for that if you'd like. But just basically, we'll take a further in-depth, more analysis here on what we've got going on here. Now, Ethereum as well, starting to recover nicely, getting back above $1,500 as well. I like that we came down, made support on this previous range of consistent resistance here. And outside of that as well, this is a critical level here. This is where we had resistance back here in the previous cycle. So just like with Bitcoin, right? Again, we wanted to see here above all that we would be able to make, again, previous resistance support. And that's what we've likely got going on here. We've got a potential quick reversal here that could come up here throughout the month of March that again could start to combat some of this price action. And what we basically got here was the cup and handle breakout that we were looking for as a potential play for Ethereum. But above all, again, beautiful price action here in the sense of a correction coming down, making this clear support over the last few days. I love seeing it, but I want to see some volume follow through. Now, in regards to altcoins overall, before we dive into this topic of Ethereum versus other layer ones, I want to go ahead and just spend some time here to analyze altcoin dominance. Altcoin dominance, if anything, has been ticking up slightly over the last few days, signaling that we've probably got some optimism coming up here where altcoins are going to be leading the broader market, or at least in this case, they're going to be leading against Bitcoin, which is a really exciting trend here to see. The dominance didn't fare negative at all when Bitcoin was going through this correction. Sure, altcoins went down, but they didn't lose dominance like they tend to do. And this showcases to us that we are in the full swing of a bull market here, guys. That this is just one of many phases that are coming through the broader cycle here. And this leads us to towards our more important conversation here. Sorry, guys, I think I need to take a quick sip of tea. Sometimes I find myself talking too quick or talking too much, but I digress. I want to go ahead and focus here on what happened over the past month of February. As we're coming into the month of March, it is very important to talk a little bit about the previous month's narrative and talk about whether or not things are going to be changing this month. So what we saw last month was very clear. It was the wave of layer one alternatives. In fact, it's something that I talked about way back, way back, though I didn't per se predict that would happen now by any means. Something I talked about way back in April of 2018 called the Protocol Wars. And it was this idea that as Ethereum, again, gets clogged in its network similar to where it was back in December of 2017 and January 2018, that there would be other competitors coming to the forefront. Take a look here at Binance Coin, right? Binance Coin soaring up here with the advancement of Binance Smart Chain. Sure, there are some centralized caveats. Sure, in this case as well, there's not much new innovation coming on the Binance chain. A lot of it is migrated from the Ethereum ecosystem. It's provided the throughput that a lot of people wanted in this case, and the symptom of lower fees compared to what people had to pay on Ethereum. And because of that, with Binance's reach, with Binance's ecosystem, the broader audience here that knows about the Binance exchange and its platforms, this led towards some pretty vertical price action in BNB, potentially becoming a ETH competitor. Cardano coming out with smart contracts here in the month of March, getting a lot of traction here, climbing from 569 Satoshis up to 2,638 right now, with a total peak of nearly 3,200. Right? Very big surge here in ADA's price. And something that we again talked about as a potential play here, if we were to break out above this consistent line of resistance, this is a first we've seen on the ADA ETH ratio that we've actually broken above this level since all the way back in January. This is huge stuff, guys. It showcases here the demand for layer ones, but outside of that as well, that traders and speculators in the market are making a bet here that Cardano is going to be able to come out on top and be a potential competitor with the launch of smart contracts. And outside of that as well, one player that has absolutely faded a decent amount here since early mid-February was Avalanche. This was another potential scalable protocol launched by Amin Ghansir. So there's a lot of different plays out here again, and you can see here it's holding support on the previous initial listing range on Binance. You can see through all these metrics here that a lot of the layer ones have stolen the stage, that it looks like this is the opportunistic time for a lot of these protocols to possibly step in and steal market share, not only on a price basis and on a valuation basis, but also on a fundamental basis, extracting some of that DeFi ecosystem into these different plays. And to be honest with you guys, I'm not going to sit here and say that there's no chance for them to possibly steal some of the show. In fact, I'm going to take a very neutral view here in a little bit, where we talk about there being a world for both of the plays. But I want to go ahead and focus on a trader's perspective first. And that's to talk a little bit about where the value is going right now. All right. So first off here in the short term, I got to say, I think there's a very clear narrative here that in the short term, Ethereum is going to steal back some of the stage here. Because there's a lot of major scaling solutions that many of the protocols have been betting on, whether it's the most optimal solution or not. They've been betting on this, and it's coming out in March. And one of those is Optimism. After going on a major raise spree as well as hiring spree, Optimism is setting for mainnet launch in March. And I can tell you guys, this is one of the huge catalysts that could be either a make or break moment for Ethereum. as a protocol. And I'm not exaggerating that. This is seriously what Ethereum is riding on, because if Optimism does not succeed in March or April or May, right, the more you step down that time frame, the less likelihood Ethereum has of surviving. And I'm going to be real about that, because this is the time for DeFi. DeFi is not going to wait around. We already had our first lesson in the last summer. This is the time now where Ethereum's community needs to step up, adopt core protocol upgrades like EIP 1559, all these other things, stepping into ETH 2.0. The problem is they're all a ways out. So Optimism, as well as ZK rollups in this case, optimistic rollups or ZK rollups, depends on what solution you prefer. Both of them are going to have to be the potential savior here to get people on-ramped onto layer 2 and start offsetting some of that network traffic. And that's the short-term narrative that's really getting me optimistic personally about Ethereum. So again, that's what we're looking for here. I think that we're going to start to get that rebound as mainnet starts to come online. For Optimism, we start to see some protocols announcing, moving over, or at least offering their same technology over on Optimism. And the really great thing about it is people say that, this is going to take a long time. Well, to be honest, if Optimism is on mainnet and it's functional, to be honest, it doesn't take very long to get that technology over, because the optimistic virtual machine, or the OVM, how applications actually operate and function on the optimistic network, they're written in the same exact language and code that you would have on the Ethereum virtual machine, or EVM. So you can take all of that Solidity code, all of that traditional code that you've developed, those projects, those dApps, you can move them onto layer 2 very simply. And this again leads me towards a more longer term picture here, guys, because I don't want to be, I can admit in this case, I'm invested in a lot of ERC20 tokens. I have positions in Ethereum and Uni and a lot of different plays. I'd be lying if I said I didn't, right? And I'm not here to deceive you guys. But at the same time, I'm not opposed to circulating my capital into other plays. I've talked about how Cardano was likely going to outpace Ethereum here when we took a look at the ratios as they were coming towards releasing smart contracts. I've also talked about potential other competitors. A Binance Smart Chain might step in. As much as there's a lot of heavy ETH critics on it, I'm not as much of a big critic, because it's providing lower fees right now for people. And people are trading that for potential censorship resistance, or things of the sort that usually people care about. This leads me to my ultimate point here, is that at the end of the day here, I think there is going to be a world for both. I've had a hard time kind of coming to this conclusion, but this was a really good article I read here from CoinDesk yesterday that was coming out from one of the, it was an opinion piece here from CoinDesk. They discussed a little bit from an individual, a little bit of a feedback from an individual known as Amos Meyer. I hope I'm not mispronouncing his name. You guys know that I'm not the best in regards to name pronunciation, but he came up with a really, really good perspective here, and he's actually got a good track record behind him. Probably actually one of the most time-tested, opinions in the space, because he was one of the co-founders of Coins, the Coins protocol. And for those who don't know, Coins was an original attempt, even before Ethereum, to really go about trying to provide an ability for people to tokenize things, to create alternative cryptocurrencies, or altcoins as we know them today, in order to actually utilize the Bitcoin blockchain and still be able to foster out new ecosystem developments, right? So basically what we still have in mind today for this ecosystem of altcoins and Ethereum and smart contracts, the Coins protocol was one of the first moves there. And he's also been a board member at Horizon and Algorand, which are, again, a few other different projects out there. Now, he goes through in this article, and I really recommend you guys read through it here. I'm also saying a really, really good set of points here, but I want to go ahead and scroll down in to the layer 1, layer 2 value capture section. This is kind of the ending part of the article here. And throughout the article, he basically states a few key points here that over the years, they started to realize through different phases that inevitably there was going to be a fostering of multiple different types of blockchains that service certain needs. So for example, Ethereum might be really good at certain things that more scalable blockchains that probably have more trusted entities like Algorand or Binance Smart Chain, whatever it may be, that might be a better solution for other things outside of DeFi. Or maybe there are some DeFi applications or CeFi applications or whatever you want to label as open finance. I'm really much more excited about open finance and opening access to these financial opportunities, cutting down the cost of payment networks. And it really depends on what kind of restrictions you need to work within in order to deliver on what you want to deliver, right? And overall, in this case, he brought up the point here that there is going to be, in this case, layer 2s that can completely swamp the value of layer 1s. And this is a really, really interesting perspective. The idea here that many layer 2 technologies, and this could be layer 2 scaling solutions like Optimism, but it could also be things, for example, like Chainlink. It could be things like the graph. It could be a lot of technologies that offer secondary services that build on top of the existing tech stack of Ethereum or other layer 1s that really turn out to be the winners in the long run, and how, again, layer 2 solutions could be like this. So in order to build on this point of layer 2 scaling solutions being the focus point for the month of March and going forward into the altcoin cycle, rather than some new sexy, exciting, and highly scalable layer 1, I want to spend some time to focus on an example that I think many people aren't aware of. That is a prime example of how projects are starting to adapt. Many of you very well know the project Unibright that I was fortunate enough to be an advisor on all the way back since 2018, and since then they've grown to becoming one of the largest enterprise players in the blockchain space. Well, they just recently partnered with Provide over the last couple of months in building out a new framework, what they call Baseledger. A Baseledger in this case is a new layer 2 solution. I really want to emphasize on that point because I think that Baseledger overall, and I mean this in the nicest way to Stefan and Martin and the team, I don't think they emphasize it enough. This is a layer 2 solution at its finest for both enterprise blockchain as well as potentially enterprise DeFi. So for those who don't know, Unibright and Provide in this case have been two leading projects that have actually helped in pushing forward and persevering and building technologies for enterprise companies to actually utilize Ethereum and decentralized networks. In this case, they provided for originally the Unibright framework that allowed people to actually have a whole set of tools and suites within the Unibright framework to actually simplify developing enterprise smart contracts. But with things, for example, like the high cost of transactions, this is already serving as a barrier to a lot of people participating. And not just the cost of transactions, but also some other factors that some people wouldn't like about layer 1 solutions like Ethereum. And that is things like GDPR compliance, the right to be forgotten, which might seem a bit counterintuitive for blockchains or decentralized systems. But it's imperative. It's the reason why so many companies, especially in Europe, have decided not to participate with blockchain technology. Well, it's been almost kind of a thing to test around with, something to consider for the future once the technology gets worked out. Well, Baseledger is a great example of this. It is a layer 2 that not only factors in being able to provide much better scalability here, but being able to cut down on transactions on the main chain. So any type of, for example, traditional SAP integration in this case with traditional technologies and interactions between businesses could be all done off of layer 1 in this case, right? Off the Ethereum network, right? Where they traditionally would have had been done. And now this is a framework where all of these transactions can happen on a much more scalable ledger system like Cosmos. And then you can still utilize aspects of traditional blockchains like Ethereum for settlement if you really wanted to. But what's great is that for invoicing, for all types of different business activities between one business to another, you're able to do it through a standard here like Baseline that will take all that traffic off of the Ethereum chain, will bring down the cost of transactions to nearly nothing. That is a future we have to look forward to here. So again, I don't want to spend too much time in this case talking about Baseledger. I recommend you guys go through and do some research on it, but I really thought it was worth a valuable mention here because it's an example of the changing times here, giving about the certain benefits that you might not get on a layer 1 solution. It's the same exact arguments here that people have made for Lightning Network, for Bitcoin, for Optimism on Ethereum. Layer 2, if you can make it properly valuable for the parties you intend to use it, they will come. They will use it in this case. There is enough incentive for the Ethereum ecosystem to adopt these types of technologies. And I'm really, really excited to see going forward how Baseledger, how Optimism, how all these solutions really take a tune to the times where there's so much high gas fees, where they really can step in and provide that value proposition for users for all different types of use cases. So again, I'm very much looking forward to the month of March here. I think this is going to be a great month for projects like UBT or Unibright that are persevering and building great solutions, that are tying things back again to the things that people need, are bringing back technology to people who really need it. And what's great is that I think we're still going to continue to see, whereas the past few months have felt like a bit of stagnation in the sense of innovation because people have been waiting for these layer 2s, I think that we're going to see things coming roaring back. And it'll be a really interesting, almost kind of war to see, like we talked about earlier, the protocol wars of Ethereum competing against a lot of other layer 1s. Can the Ethereum ecosystem, scale out the architecture, and get itself back on track to being the #1 leader. Because I can say in the month of February, it certainly wasn't looking like it. So we'll have to see, guys. I'm really excited about that future to see what happens. I want to give props to all the people out there who are building layer 2 solutions, the team at Optimism, the team, for example, the team's building around ZK rollups, for Unibright and Provide in this case for building that Baseledger. There's a lot of great solutions being built. And when the innovators build, the investors in the market, as well as the innovators and the builders, are certainly going to be listening. So guys, that's it for today's video. Thank you all so much for watching. If you like this one, please consider dropping a like, consider subscribing and hitting the bell icon. And if you got something to say, if you think there's anything important to mention, please leave it down in the comments down below. I'd love to hear from you guys. That being said, everyone, thank you all so much for watching, and I'll see you all in the next one. Take care, everyone.